Welcome to Pro Webcast News, where we bring you daily industry updates. Today is Tuesday, February 23rd, and you're watching the Afternoon Update with Paul Wilson. Today's news is sponsored by Tucker Advisory Group, teaching both clients and financial advisors powerful, safe money strategies. For more information, please visit tuckeradvisorygroup.com. Now for today's headlines. Consumer confidence fell in February, reaching its lowest level in 10 months, according to a report by the Conference Board. The index of consumer attitudes fell to 46.0 in February from a revised 56.5 in January. The reading in February is the lowest since April of 2009. Meanwhile, the expectations index dipped to 63.8 from 77.3, while the present situation index fell to 19.4 from 25.2 in January, the worst reading since February of 1983. The Conference Board noted that consumers remain very pessimistic about business conditions, job markets, and income prospects. Finally, consumers' views on the labor market also deteriorated, with 47.7% considering jobs hard to get, while those viewing jobs as plentiful fell to 3.6%. In regulatory news, the number of problem banks in the U.S. spiked 27% during the fourth quarter of last year to 702, the highest number since 1993, according to the Federal Deposit Insurance Corp., or FDIC. The FDIC said that overall, the industry saw a profit of $914 million during the quarter, with the improvement most concentrated among the largest banks. While the profit is a significant improvement from the $37.8 billion loss experienced for the same period 1 year earlier, FDIC Chairman Sheila Bair notes that this only points to how bad things were a year ago. Smaller financial institutions continue to struggle with deteriorating loan portfolios, especially with those loans that are linked to commercial real estate. Meanwhile, 20 U.S. banks have been closed so far this year, bringing the total to 185 since the beginning of 2008. In insurance news, a total of 36 commercial property and casualty insurers received rating upgrades during 2009, while 24 were downgraded, according to a recent report by AM Best. The report, titled Upgrades, Downgrades Moved at a Similar Pace in 2009, said that those insurers that were upgraded, quote, generated strong operating results in select business segments, such as surplus lines and medical professional liability, unquote. Such insurers also provided consistently strong results over a period of several years, while maintaining consistent underwriting discipline and conservative reserving practices. In addition, they were able to strengthen their risk-adjusted capitalization. Meanwhile, insurers who faced downgrades posted results that trailed overall industry trends, and often had concentrations in business segments that have been affected by competitive and economic pressures, as well as regulatory reforms. I'm Paul Wilson, and thanks for watching Pro Webcast News. For more in-depth news and features, visit producersweb.com.